All right, let's talk about the big question on every crypto investor's mind for 2026. Bitcoin. Is it a buy, a sell, or a hold? Today, we're going to break down the really conflicting expert forecasts out there to help you make sense of all the different forces at play. So, after the wild ride of 2025, what's the right move for Bitcoin investors heading into 2026? I mean, think about it. Bitcoin rocketed to a new all-time high of over $126,000 in October 25. And then, bam, a sharp 30% correction. It's left a ton of investors just scratching their heads, wondering what in the world comes next. Okay, let's dive right. So here's how we're going to tackle this. First, we'll look at the big dilemma facing Bitcoin in 2026. Then we'll dive into the bull case, the reasons to be optimistic. After that, the bear case, which is basically history's warning. And finally, we'll wrap it all up with a practical playbook for investors. Okay, so Section 1, the 2026 Bitcoin dilemma. And it really is an unstoppable force meeting an immovable object. The entire debate for Bitcoin in 2026, it all boils down to one massive fundamental conflict. So on one side, you got this idea of the institutional era. Analysts from big firms like Grayscale and Bitwise are basically saying that all the new institutional money coming in has fundamentally broken Bitcoin's old boom and bust cycle. But on the other side, you have the old guard, the historical four-year cycle. This camp says, nope, history is still in charge, and 2026 is scheduled to be a major correction year, a crypto winter. So the billion-dollar question is, which one is right? All right, let's dig into the bull case. This is where things get really interesting because it's all about a mathematical collision between demand and pure scarcity. It's a story told in numbers, and it's all centered on a massive, massive supply shock. Okay, check this out. Only 164,250 new Bitcoin will be mined in all of 2026. That's it. The supply side of this whole equation is totally fixed. It's predictable. You can't just make more. That's the total new supply coming onto the market for the entire year. But then you look at the other side, the demand side. The base case projection for institutional Bitcoin demand in 2026 is 775,000. And get this, that's just the demand from the big institutional players. We're not even talking about retail investors yet. And when you put those two numbers side by side, it's pretty staggering. Look at that gap. The projected demand is set to outstrip the new supply by nearly 5 times. I mean, this right here, this imbalance, this is the absolute core of the bull argument for 2026. So where is all this demand coming from? Well, it's not just one thing. We're talking about continued massive inflows into Bitcoin ETFs, more and more big corporations adding Bitcoin to their balance sheets, and even some countries starting to buy it for their sovereign reserves. It's coming from all directions. And we've seen something like this before. Analysts are looking back at the 2020-2021 cycle, where a similar, but actually smaller, supply squeeze led to a staggering 611% price increase. Based on that, folks like MEXC Research are saying, hey, the math supports a price target somewhere between $150,000 and $200,000. Okay, but hold on. There's a really powerful counterargument here that basically says, not so fast. This is the bear case, and it's not based on future projections. It's based on Bitcoin's predictable, and some would say unavoidable, historical pattern. You see, for its entire existence, Bitcoin has moved in this very clear 4-year cycle. It's all tied to its halving events. You typically get 3 up years followed by 1 sharp pullback year. And if that historical pattern holds true, well, then 2026 is supposed to be that pullback year, a big correction, not another crazy all-time high. And what's really telling is that even the big, typically bullish institutions are starting to get a little more cautious. Take a look at this. Both Standard Chartered and Bernstein have actually revised their forecasts for 2026 downwards, pulling back from some of their earlier, much more aggressive predictions. When the bulls start hedging, you've got to pay attention. And it's not just the 4-year cycle theory.
there are other bearish signals flashing too. You've got technical patterns like the death cross showing up in late 2025, and you just have to look at history. Past bear markets have seen brutal 75 to 85% price drops. So yeah, the bears definitely have a lot of ammo for their cautious stance.
Okay, so that brings us to the big question. What do you actually do? This is the investor's playbook. With these two incredibly powerful and totally opposing forces at play, the pros will tell you it's less about trying to predict the future and more about being prepared for whatever comes. First things first, a lot of pros don't see Bitcoin and gold as competitors. They see them as complementary. Think about it. Gold is your time-tested, stable, safe haven asset. Bitcoin, on the other hand, is your high-growth potential play. It has a really low correlation to the stock market, which means it zigs when the market sags, offering great diversification. And it has what they call asymmetric upside, the potential for huge gains that far outweigh the potential for loss. Now, here's one specific strategy that's being floated. It breaks 2026 down into 4 quarters, or phases. In Q1, the accumulation phase, your dollar cost averaging in, maybe buying the dips. Then in Q2, the acceleration phase, you're holding your core position, maybe taking a little profit off the table. By Q3 and Q4, if the price starts to really run, you're shifting into aggressively taking profits and reducing your risk as the market gets euphoric. It's a dynamic plan. And this framework gets even more specific, giving you clear price targets for taking action. The real key here isn't guessing the exact top. It's having a disciplined plan before the market goes crazy. A plan to systematically buy in when prices are reasonable. And maybe even more importantly, a plan to take profits on the way up so you don't get caught up in the euphoria. And finally, you've got to account for the wild cards, the black swan events. These are the low probability but super high impact events that could just throw every model and prediction out the window. On the positive side, what if the US government announced it was holding Bitcoin in reserve, or a major central bank did? But on the negative side, what if a critical, unfixable bug was found, or a major coordinated ban? These are the things that keep investors up at night. So it all comes back to this one central question for 2026. Will this unprecedented supply squeeze, this tsunami of institutional demand, finally be enough to break Bitcoin's historical 4-year cycle? You have the unstoppable force of new money meeting the immovable object of old patterns. And what you decide to do this year really depends on which one of those you think is finally going to get. Hey, if you found this breakdown helpful for thinking about the road ahead, do us a huge favor and hit that like button. Share it with a friend and definitely subscribe to Crypto Explorer 24/7. We do deep dives like this all the time. Thanks so much for watching.